All right, so we've reached the 1,000 mark when Beth Kindig asks what Nvidia's target price is. When she inquired about 2030 or the following year, they said, "Give us both." Then Beth stated, "We have modeled 65% and 65% upside based on Blackwell by the end of 2025 calendar year. By 2030, this company should be minimum 10 trillion in revenue, maybe higher, so we have a long runway with Nvidia." As a result, Beth noted, "We can't stress that enough multi-generational investment opportunity. Many Chinese companies are benefiting Baidu, Tencent. Given that we are currently in the AI economy, many people believe that this is just the beginning." Impressive financial reports from AI, the AI infrastructure from Nvidia. However, there are a lot of beneficiaries, so I would advise everyone to pay great attention to that. To be clear, you indicated $10 trillion. I apologize. I intended to say market cap, not revenue. Gotcha. Even though Nvidia's stock has experienced some incredible runs up more than 170% in the last year, many analysts are still optimistic, and some even believe that Nvidia has more room to grow. Jim Cramer of CNN recently predicted that Nvidia shares could rise even higher following Blockbuster's earnings report. Beth Kindig, the CEO and chief tech analyst of the IO Fund, also believes that Nvidia will reach a $10 trillion market cap by 2030. In today's video, we'll answer this question by walking you through some analysts' opinions on Nvidia and discussing whether Nvidia stock is still a buy even after it crossed $1,000. Before we do that, though, if you want to stay up to date on the latest news on the stock market and Nvidia, you can subscribe to our channel, Investing Tutorial, for all the updates. Nvidia stock has increased by almost 12% since the company reported earnings, and these two analysts believe that the only direction for Nvidia stock is up. Returning to the video for today, the key takeaway is that the upcoming Blackwell architecture will outperform the Hopper architecture that has already driven these sales. It will also hit as soon as Q2 full ramp by Q4, as mentioned on the call, which is when you saw the stock price reverse after hours. When Beth was asked, "Could you just share your initial estimates of the potential earnings contribution?" Data centers currently account for roughly 85% of overall revenue. Are they likely to remain that way, or may they increase significantly? Moreover, then Beth responds, "Yes, we're really very early to AI acceleration, and so Hopper drove that $90 billion that we see. We are forming a $200 billion data center segment by the end of calendar year 2025, and the management team today implied and gave hints that that could happen because what they said is that Blackwell will deploy with over 100 OEMs, which is 2 times broader and faster than Hopper, which deployed with 50 OEMs. If you imagine you're hearing all these comments from management on the call, it's really evident that the second generation of these Blackwell architectures are in high demand. The message here is that Hopper provided us $90 billion annual run rate. What would the Blackwell give us? At that point, you started to see this extraordinarily positive price after hours. Generative AI GPUs are going to be a step forward from what has been implemented. With the release of this second release, people are starting to look forward to the end of the year. If I may add, another important point to note is that Nvidia is cutting its product cycle from 2 years to 1 year. This is a bold move that needs to be made right now, because it enables them to build on their already extraordinary growth. We've all seen how strong Nvidia's Q1 earnings were, exceeding estimates for both revenue and profits, and driving the stock price above $1,000. However, Kindig actually thinks Nvidia's valuation is still low given its potential for growth. As AI adoption increases, Kindig believes that demand for Nvidia's specialized AI chips and platforms will rise significantly. She also noted that analysts will start revising their price targets on Nvidia stock upwards with the release of the company's highly anticipated Blackwell GPUs. Kindig continues to see big opportunities for NVDA in AI data center software and other emerging technologies. However, Roth Capital Partners analyst Alex Lura stated that he wasn't at all surprised by Nvidia's earnings, as many of the company's customers had already signaled plans to increase depending on Nvidia products. He also believes that the heightened demand may be just a temporary thing if the hype around generative AI cools down or competing approaches emerge. As a result, Nvidia will need to keep advancing its technology to stay ahead for the long term. And the stock price will definitely move up as more analysts change their targets for higher ones. To be honest, I lean more toward Kindig in this situation. It's highly unlikely that the market for NVDA products will run out anytime soon, according to Bloomberg, which projects generative AI to reach a $1.3 trillion valuation by 2032. This growth rate of 42% from 2022 to 2032 is indicative of a bullish outlook for Nvidia stock, and more analysts are joining the bandwagon and urging investors to invest heavily in the company. Let's look at what some of these analysts had to say. Senior semiconductor analyst at BofA Securities, Vivek Arya, what are the report's headlines, in your opinion, from your perspective? He was questioned about his excitement for the Nvidia story, which has been confirmed for a number of years. And Vivek Arya says, I think there is a global race that is going on between cloud service providers, consumer internet companies, on-premise enterprise, and thousands of venture-backed startups to take the best advantage of this wonderful and amazing new technology called generative AI models, and Nvidia is best positioned to deliver a turnkey solution to every one of these constituencies who wants to take advantage of this technology, either to. They only reached about 40% of sales as opposed to the mid-50s in the previous quarter, indicating that demand is expanding to include automotive, enterprise, and consumer internet companies. The second thing we discovered is that demand still exceeds supply, which was probably the company's concern before the call, because they are about to undergo a major product transition to a product called Blackwell. There was some worry that there might be an air gap, but what we are learning is that they are able to navigate this transition quite well simply because of the breadth of their product and customer base. The third and most crucial point, which I believe is sometimes overlooked, is that the company's top line is increasing by more than 200% annually, and that every dollar of sales is converted into more than 50 cents of free cash flow. This is something that a mega-cap company in the technology sector or the market is able to achieve while trading at just 1.5 to 1.6 times the multiple of the S&P 500. In other words, I believe the company is checking all the growth boxes when it comes to cash flow generation and execution, and the stock is still only about 30 times next year multiple for what is essentially a market-weighted stock among the majority of institutional shareholders. Nvidia's results were very good, with revenues and profitability comfortably above forecasts. Growth was driven by strength across all business categories, according to Vijay Rakesh, Managing Director and Senior Analyst at Mizuho Automotive Gaming Data Center. Rakesh thinks Nvidia is seeing a lot of growth across all areas, driven by aid, and that Nvidia will continue to be in a good position to take advantage of major technological trends. While some investors had anticipated that NVDA would push prices higher from their current levels, KeyBank analyst John Vin wasn't happy that the company hadn't exceeded expectations by a significant amount. We appreciate you watching the entire way through the video. These videos take a lot of time and effort to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. Meanwhile, Vin believes that Nvidia needs to show that it is still making progress with the Hopper AI accelerators. Finally, Vin said that Nvidia needs to execute well on its automotive and Omniverse initiatives to diversify revenue beyond core gaming and data center markets. Nvidia was the big winner. If you look at the rally over the previous 5 years, it's only a casual 3,000% gain. Today's gain was another record high, and it's difficult to argue with the quarter in which they beat sales expectations, which implies a 245% increase in sales. In order to make the company more accessible to regular investors, they announced that sales will quadruple the following quarter, and that they would be splitting their shares 10-for-1 in the upcoming weeks. They also gave a 150% boost to their dividend. Upon setting a price target of $1,300, which implies a 30% gain, Stacy Raskin, the managing director and senior analyst of U.S. Semiconductors at Bernstein, said, "Yeah, It's funny how somebody I was on the phone talking to a lot of clients today said, well, wait a minute, that would mean that it would become the most valuable company in the world. And maybe, yeah, like, okay, doesn't seem like that much of a stretch at this point. Right? No, I think if you kept it at 1,300 after the stocks, then we could really talk about it well. When we get there, I'll take it for now. Well, let's talk about that when we get there. In your coverage, have you ever seen a growth engine quite like this? I mean, not for a company at the scale that they were at before it started, but eventually most businesses hit the law of large numbers. It's just difficult to grow, say, 1,000,000% year over year forever when you're as big as this. However, at this point, we are not even approaching the cusp. Rather, we are plunging headlong into the AI gold rush. Keep in mind that while the stock has increased by 1,000% or more over the past year or so, Nvidia's valuation has actually decreased significantly, meaning that as the stock has increased, the numbers have increased by a much greater amount. And so, rather than this being some kind of phantom, people are simply betting on growth. In the end, a significant number of Wall Street analysts are optimistic about Nvidia's leading position in driving the AI revolution. However, will this be sufficient to entice retail investors to consider Nvidia, or is it too late to buy the stock? Well, according to analysts gathered by Yahoo Finance, Nvidia's earnings per share is anticipated to increase by 94% in 2025 compared to 2024. Additionally, the business comes in second on their ranking of the most buyable stocks. Following earnings, Nvidia announced a 10-for-1 stock split. From a psychological perspective, this is a great move because retail investors account for 40% of trading volume, and the stock split will eventually push more into retail. As a result, investors have two options. They can buy more Nvidia shares now, or they can wait until after the split to buy more shares at a lower price per share. Either way, Nvidia is one of the best-positioned companies in the market and the leader in the AI market. Since Nvidia stock is the kind that you buy and hold for the long term, we believe that investors shouldn't put off investing in Nvidia any longer. Analysts have focused a spotlight on Nvidia for those who are searching the horizon for compelling opportunities. The company appears ready with live evidence, and only good things appear to be ahead. What do you think about Nvidia stock? Is it worth the money right now? Please share your ideas in the comment section provided. If you'd like to know what companies like Nvidia have been up to lately, don't forget to let us know what your valuation is. The financial world is abuzz with a jaw-dropping prediction that has the tech and investment communities on edge. An influential market analyst has made a startling forecast, projecting that Nvidia, the American multinational technology company, could reach a market valuation of $10 trillion in the near future. This bold prediction has sent shockwaves through Wall Street, igniting both excitement and skepticism among investors and industry experts alike. Nvidia, known for its innovative graphics processing units, GPUs, and advancements in artificial intelligence, AI, has already seen tremendous growth over the past decade. The company's GPUs have become essential in a wide range of applications, from gaming and professional visualization to data centers and autonomous vehicles. Nvidia's AI technologies, particularly in deep learning and machine learning, have positioned it at the forefront of the next technological revolution. This potential for growth in AI and machine learning is a key factor behind the analyst's astonishing forecast. According to the analyst, Nvidia's current trajectory, if maintained, could lead to exponential growth, driven by several key factors. First, the demand for GPUs is expected to surge as more industries adopt AI and machine learning technologies. From healthcare and finance to automotive and robotics, the need for powerful computational capabilities is skyrocketing. Nvidia's cutting-edge products are well-positioned to meet this demand, providing the company with a significant competitive edge. Second, Nvidia's strategic acquisitions and partnerships are anticipated to bolster its market position. The acquisition of ARM Holdings, a move that promises to expand Nvidia's reach in the mobile and IoT sectors, is seen as a game-changer. This acquisition is expected to enhance Nvidia's ability to integrate its AI capabilities across a broader range of devices and platforms, further solidifying its dominance in the tech industry. Moreover, Nvidia's ongoing research and development efforts in AI, quantum computing, and other frontier technologies are likely to open up new revenue streams. These innovations could potentially disrupt various industries, creating unprecedented opportunities for growth and market expansion. The analyst suggests that such groundbreaking advancements could drive Nvidia's market capitalization to unprecedented heights. While the prediction of a $10 trillion market valuation is undeniably bold, it underscores the transformative potential of Nvidia's technologies. However, it also raises questions about the feasibility of such growth, especially considering market volatility and competitive pressures. Critics argue that while Nvidia's prospects are promising, the road to a $10 trillion valuation is fraught with challenges. In conclusion, the analyst's shocking prediction serves as a testament to Nvidia's remarkable potential in the rapidly evolving tech landscape. Whether or not Nvidia will achieve this monumental milestone remains to be seen. But one thing is clear: Nvidia is poised to play a pivotal role in shaping the future of technology. As investors and industry watchers continue to monitor Nvidia's progress, this prediction will undoubtedly be a focal point of discussions in the financial and tech communities for years to come.